What's up, guys? This is Micah, and today I'm going to be doing a quick video on my APOP trade and game plan in the morning. Today is May 11th. It is 3:15 p.m. and I'm going to talk about what I was looking at on APOP, why I ultimately decided to go long and I avoided the short altogether. Um, Quick look here at my daily chart. One thing that I always do for stocks in the morning is check out the gap stats. Okay, this is a very useful tool that you can get from Scripts to Trade. Um, there are a ton of tools that these guys offer that just make everything about a trader's game plan in the morning or intraday a lot easier. So, for example, for me to go back and get this kind of information would take months, especially, if I just want to move very quickly between stocks. I just have the information right up here immediately available. So it's just a little tool like that. It's stuff like that that just makes our job and our time in the markets that much easier. So one thing that I like to do first off is check the gap stats. Now, do the gap stats serve as a guideline? Yes. Are they 100% accurate? No. But it kind of gives you a great idea of the company's history, what the company does when it presents itself with a gap. And that's very important. So let's take a look at the intraday chart, and I'm really going to talk about what I felt was the most important. Let me get some. Okay, it's a little bit cleaner. Um, so APOP was really a tape reading play, okay, through and through. The number one thing that stuck out on APOP to me was the soaker. Okay, so the soaker showed up at between 440 and 445 all day. And this was very important. Okay, so whenever I see a soaker, whenever I see um, hidden buying, hidden selling, a lot of these different things on the tape, you have to understand that there's a reason for this. Okay, there's an agenda. And the agenda, when you see a soaker, in my opinion, is to convince long retail that the stock is going to either hold or it's going to run higher. And for those people who are not reading the tape, um, this can be very dangerous because all they see is price continuously holding this line. They think it's just great support. Okay, but this is why tape reading is so important. If you look at the tape and you see the soaker from 440s, once you identify the soaker, you know that there's something else here. And by the way, for those who are watching the tape, the soaker was blatantly obvious. So you kind of have to ask why, right? So you see the soaker, price keeps on respecting this low 440s area, and every time that the stock spikes, it gets stuffed. Okay, so we had a soaker, and then there was also selling into the move. Now remember, there must be an exchange. Okay, so if they're looking to dump, they have to have liquidity. Okay, they have to meet a certain threshold for what they're looking to accomplish, right? It's just that is 100%. You cannot get around that. Okay, there must be liquidity. So when you see little things like propers on the tape, um, they're actually big clues. They're actually very big clues as to what the stock is most likely to do. And I always say most likely because it's not 100%. This thing could have ripped to six. It's very unlikely, but again, you just cannot rule anything out. You just have to take things second by second. So 440s, we identify the proper. I go long, and I believe that the stock is going to rip, and it does, and I get 19 cents out of it. I will post my fills on Twitter for you guys. But the one thing that was really key for me is to avoid shorting APOP, and I'm going to give you a couple of reasons why. So the first reason was that it's a day one. I really try and avoid short side on the day one of the move. Okay, so the second reason is if you looked at the scans this morning, there was really not that much to pick and choose from. Okay, it was kind of slim pickings. And when you have a situation like that, you can almost guarantee that if there is a main ticker on the scan, it's going to be very crowded. And that's exactly what we saw on APOP today. Okay, so this is stuff that I talk about in pre-market in Mad as Money. This is just some of my rules that I had to learn the hard way over the years. And the third thing was the very, very, very heavy tape in the first 15 minutes of the day. It was absolutely relentless selling, barely bounced at all, and it never really spiked, just completely faded to the downside. And when you have a situation like that where it's a day one stock, there's borrows available, the very heavy tape at the open, and it's tanking, and it's a crowded play because it's the only one on the scanner, you're going to have a lot of FOMO, and you're going to have a very crowded stock. And I believe that the price action reflects that. The fade at the open, the attempted recovery here, and more failure, and then a huge squeeze to new high of day. This was all trapped shorts. Okay, this was where I was long. So I'm very grateful that over the years I've learned a lot of these things, the hard way, and they definitely weren't easy when I was learning them because they were learned through losing. But now I'm able to identify a lot better the some of the tactics that are used and how to stay safe from getting squeezed for the most part. And I still get squeezed, I still get dumped on as well. But for the most part, a lot of it has been cleaned up, and I'm grateful for that. And that's why I make these videos, just to kind of share with you guys some of the lessons that I've learned in a quick little video like this. But at the open, I'm always looking to identify the price action on the daily chart. I want to see if it's a very beaten down chart. If it is, then it fits my criteria for short selling. Um, Most of the time. Of course, there's so many factors, right? Also, if the price at the open is below the pre-market high, then I'm also geared towards the short side. But, you know, there's something I've learned over the years, and I'm going to share it with you. If it's too easy, beware of it. So, price came down off of the highs in pre-market, very heavy tape. It's fading at the open. It looks like it's a super easy short. It's just fading, that's it. That's all that there is. But when you see stuff like that, you have to be very weary because when you know that shorts are very heavily involved in the stock, then there's going to be the opposite side of that. Eventually it's going to grind, it's going to go sideways and start to grind, and shorts are going to get caught off guard. And when you have a very crowded play like this, I believe that that's even more likely to happen. So I know it looks like I have a lot of stuff on my chart here. I guess I do, but these arrows are abnormal volume arrows. I got these from Scripts to Trade as well. Um, these candles and other things are just volume filters that I had coded up. But really, even without all of this stuff, just try and identify the key points, right? So day one, okay, anytime that you're shorting day one, um, you have to you have to stay vigilant, that's not to say that it doesn't work, but you have to stay vigilant. And um, when you have a very slow pre-market like we have for a while, and you have a main play, you can pretty much guarantee it's going to be crowded. When there's borrows available, multiple brokers, you can pretty much guarantee that it's going to be crowded to the short side. So maybe look for the squeeze like I do, and also very heavy tape at the open with no opportunity at all for a spike. It's just very stuffed movement. You can basically bet that you could bet with pretty good um, reliability that the stock is going to spike because there's a lot of shorts involved. When you have a move that's quote unquote easy like that at the open, it's not going to stay like that forever. You know, eventually it will turn, and depending on how many shorts are involved, depending on the float and depending on the chart, it can squeeze pretty good. And, you know, so that's what I'm looking for. I hope it helps. If you guys want more analysis like this, you can come in the room, Matt Has Money. I speak weekly there and then talk about a lot of the different lessons that I've learned. But really, in my opinion, it's just about taking notes every single day. No matter if you're 1 week in or 10 years in, there's always that next level. There's always things that you can learn and grow from. And that's my that's my opinion on trading in general. There's just always that next level, and you're never done learning. You're never at a point where you should hang up the trading journal or stop reviewing charts or things like that. I mean, at that point, I feel like you're going backwards, you know. So little videos like this, they hopefully help people, but they also help me too to kind of get my thoughts on out in the open and confirm some of the things that I was thinking. But I hope it helps. Anyway, guys, hope you're having a great Monday, and I hope you have a great week. Hope your families are safe and sound during this time, and I will talk to you soon. Cheers.